Good day, everybody. Tim Haefke from Top Notch Trading here on Monday, November 9th, with today's MrTopStep update. I'm going to go real quickly and show you what I'm looking at in this 30-year bond. Boy, ever since it double topped at 159.02 2-3 weeks ago, it's been on a slide, and they keep getting the pressure on them. The moving averages keep pushing these things lower. We're kind of oversold. I keep looking for a relief bounce, and one of these days we might see one of these things, but boy, on Friday, on a non-farm payroll, they were on their highs, and in an instant they broke two handles. So the pressure continues to be seen in this. However, I'm going to take this December contract and look back here in late July. We gapped right here, and 150.109 is the top of the gap, and the settle price was 150.28. They're looking for this area they're targeting. I was looking along the top of the gap, first asking today at 151.09, 151.12 low so far. If they continue to slide, watch out for the 150.28. But now I'm going to show you a continuation chart. And I have them channeling downward since they made these highs late August, back to low, and then coming late September. And the channel trend says it's 150 even on a continuation basis, which puts that target for the December contract. However, if you look down here, this is where the new all-time lows were. And back there in late June, we had a close of 157.18 with a low of 157, that's 147.18, 147.11. Every once in a while I get those handles wrong. But overall, if this slide continues, they're bound to make new contract lows, all-time lows, ever since they came out and repriced them. Fast forward to the S&P now. Here's the S&P. If you take last week's low of 75.5 with the high they made at 21.10 quarter, they had a fib retracement on a weekly at 62.30. SPOO 62 even in the mini. Lo and behold, they found that 62 even. So we're seeing some legs as this future tries to find a bounce. And if you take last week's high that gave us the weekly fib low of 62 even, it needs to find 20.80.40, so 20.80 half, in order to stop today's slide. If we fail to see this, and one key is this last week's low of 75 half, that's what they need to start hoping we turn. And that's hoping right now, because overall, I'm going to show you one last chart here. We take the continuation. This was the all-time high at 21.34 even. We take it to the last contract high. They had every chance. We have 21.16.80 bid in the big contract, 21.18 quarter or 75 bid in the mini. They failed to make new contract highs. They failed to find this trend line right now, which sits at 21.12.40. It's a big level. On a weekly basis, it'll start going down. And with this in mind, that failure makes me think the high is in for the year. We have 7 more weeks, 7 more weeks of action. And if they do want to take them down, see this gap over here, everybody? Go out on the charts and look how far we're going. We can get back in the 1950 area. Have a good day. We'll leave it at that.